And hello, welcome back to a new Traders Improve podcast. Today we have a very special episode for you. Moritz and I, we just came back from 1 week in Miami, and we also met Matt Zimberg, who is the CEO of Optimus Futures, which is a great boutique brokerage out of Miami, out of the US, mostly for futures. They also do some FX. And we met to record two very interesting, well, I might be biased, but very interesting podcast episodes. And in this first episode, we talk more about mindset, psychology, treating trading like a business, emotions, and all of the process-related things that traders are dealing with. Moritz and I both, we answer. Matt is mostly asking the questions, but he's also jumping into the conversation from time to time. I hope you enjoy this podcast. I really did enjoy making it. And let us know in the comments or wherever you're watching this what you think, and if we should do more of those collaboration and interview type of podcasts. Now enjoy it.
Today's questions are really oriented not so much around the software itself, but basically, the things that are related to trading and their opinion and how they what I'm really trying to say is that there's the software, but then there's the method and how they build the software. So I want to talk about things that are outside of it, like what is consistency, what is a system, what is a method, and all the things that around it. Okay, so let's start. The first question that probably everybody wants to know, okay, so we'll take turn, and Moritz will be first and well second, okay? So what is your opinion is, how do you actually get to consistency?
All right, though that's a huge question, obviously.
It's a hard question. I know it's hard, and it's individual too. So I get it.
The short answer is process, and the long answer is it's like trading doesn't go like this. It always goes like this, right? Like when you're climbing a mountain, you have to retract a little bit. Maybe that's not the wrong way, or the path is blocked. Then you move back. You try to find another route like this. So basically, if you are starting out as a trader and you want to have the fastest possible way to consistency, then in my opinion, firstly, you need to have, of course, a trading system. And that could be as simple as, for example, just an example, break off the 1 hour moving average, 50 moving average with a rejection of support resistance on the daily chart, and then I try to get in. That could be your whole trading system, right? And then you have to see if that has an edge. You have to follow it for like 20, 30 trades and see how price behaves around your entries. And then you can go from there. And you input all that data into Edgewonk, obviously,
right,
to get the numbers on how your trading idea performs. And you can quickly find out what works and what doesn't. But you have to follow a simple system first and gather data, because without the data that is inside of a trading system, you will never know what works and what doesn't. That's the fastest way to consistency. It's still going to take you years, but it's not going to take you decades if you follow it this way.
Right. Okay.
Yeah. One thing that I always like to say in this context is that people always say, okay, how can I get consistent results? But I always say that you need to start with consistent actions, because the problem of most traders is that they just jump around, and then when they look at their trading data, they see a mess, and they will only see maybe the results are not what they expected. So you need to really step back and have consistency in your approach. Even if in the beginning the results may not be perfect, but at least you can make sense of your data. And then you can find patterns probably in your trading. What are the things that I repeatedly do wrong, what are not so good, what are my strengths, and then you can improve the things that don't work so well. You can leverage the things that you are doing well, and then over time you can get to consistency. It's a step-by-step process. That's what I think. So consistency, results start with consistency of the process always first.
Right, I agree. So people, they need to have something habitual that they keep on doing and doing and doing, and it's boring, and you keep on doing and doing and doing. Understood. Great. So now the second question is, obviously, people need structure, right? So, in your opinion, what is the challenge for people in people's nature to get structure, right? And how do they overcome it? So, how do you structure your trading? Because a lot of people, I did a video about that actually the other day, where people say, I love trading because I could leave my job, I can have free time, nobody tells me what to do. But then I tell them, but you're going into an environment that requires more structure than what you had before. And now you have skin in the game on top of it, and nobody writes you a check. So you might hate your boss and you earned all this freedom, but the boss that you hate writes you a check at the end of the day. So how, in your opinion, people get structure, in their trading?
You want to go first? Or?
Yeah, I can. I think there are two components to this question. First is that expectancy is behind all of the actions that people have. As you said, maybe they have a little bit expectations that are too unrealistic maybe. And then obviously what happens is those unrealistic expectations, first of all, they drive the trading behavior. They engage in trading behavior that is not optimal for their development. They just skip steps, they look for shortcuts. And then at the end of the day, once they realize that their expectations are not met, then it's frustrating as well. So I think that's one part of the equation. And the second part is what people overlook is that trading at the end of the day, it is just like having a job. It's like being self-employed, where you run your own business.
Right.
At the end of the day, no one really cares about what you're doing all day. And what I see many people do in a trading business, or generally when they're self-employed, is that they get very, very sloppy. When nobody else is telling you what to do, it may sound like the freedom, but at the end of the day, no one tells you what to do, so you have to figure it out by yourself. So you will do things that don't contribute to your success, you will do things that harm your success until you find out what you really need to do. And it's a process, and again, you need to be habitual with it, you need to track what is working, what isn't, and then step by step increase or come closer to what is the optimal environment. So yeah, self-employed, being a trader sounds great. It is great if you get to the point where it's actually where you reap the rewards. But to get there is tough, and completely relying on yourself is often, it can be very scary as well. When there's no paycheck coming at the end of the month, and then you need to put food on the table for your family, that's then a whole different game.
Right. So you have to prepare yourself way ahead of time, that you will have to sit there 8 hours a day, structure it, right.
You need to be serious about it and treat it as a business, as a job.
Correct.
Yeah.
Correct.
Yeah. I think people have these romantic imaginations.
I like that word.
Yeah.
You're very good with words, Morris.
Thanks. Trying my best. With trading, so when they quit their job, they think like they're getting up in the morning, they jump into the pool or they go surfing, and then they check the charts, and then the next thing they do is they make $1 million, and then they go for a great dinner, and that's their whole life. That's how they see themselves. That's their picture of themselves when they quit their job. But actually, you can have that lifestyle if you follow the process, and that needs a lot of discipline. And I had a lot of problems with that myself in the beginning.
Please share with us.
Yeah, because I when I was a professional poker player, the self-image of that I had was that I was a grinder. I was sitting at the tables 8 hours a day, and I felt great about it. And when I went into trading, I thought, so okay, now I don't have to look at the charts so much anymore, and I will just make money automatically. It's gonna be super easy. Obviously, it was the complete opposite. It was really hard, and that's when reality kicked in, and I saw that actually discipline is freedom in trading, and that's for me the important part, because when you follow a process, you check your charts during certain times of the day, and you do your journaling routine every day at the same time and so on. That is like having a boss, and the market is also your boss, because London Open is London Open. I have to be on the charts, that's it, there's no discussion, right?
Yeah.
But if I learn to follow this process and this routine, then I suddenly have a lot of free time on my hands as well. So discipline is freedom in trading.
So when you played poker, just out of curiosity, you played physical or you played on the screen?
Most, like 95% was online of my learning.
I see. So you're already used to not interacting with people and just doing everything. Because a lot of the times, people want to come from a social environment.
Yeah, that's another thing.
Right? They come from people, they're talking to them and everything, and one day they just have to do this all day. And, that's exactly when they break the structure. They get bored. They're like, okay, I'll trade, I understand. That's a good point. So I always tell people about structure. I was like, if people tell me about, the freedom that they want to get in becoming a trader, one thing that I tell them, do me a favor, get up and look in your room. Just do a 360. Tell me how organized your room is, right? And many times I say, well, it's not so. It's like, okay, so structure starts way before you even approach trading, right? Another thing, do you go to the gym? Is there anything in your work that requires structure, right? So you can copy from one model to the next, right? Because people think, oh, I'm going to walk into it. No, it starts way, way before, So I think the best traders that I've met, were people that had structure before.
Yeah.
They didn't have the idea of, oh, it's freedom, right? Actually, they were more hesitant than anything else, right?
Like engineers or army pilots, they usually make great traders, and there's a reason for that.
I once spoke to a broker that raises managed futures money, and he told me one thing: I'd rather have the managed futures is where a professional trades it for others, right? So when he looks for good money managers, he says, I would always rather have a guy from the military than a quant.
Yeah.
Because it's just discipline is in their blood.
Yes.
So, okay, so we covered that. Let's talk about screen time a little bit, okay? This is my question. I'm not talking about paper trading nonsense that people spend and, draw imaginary lines, but let's talk about screen time when people actually, now they trade, now they have skin in the game. So first of all, how important do you think screen time is, right? For traders, how long do you think screen time should be there? And during the process of screen time, and again, I know it's your opinion and it will vary, what stages did you go through as traders? Like the first time you went to trading, what did actual real screen time revealed to you about the markets, and more important about yourself as traders, as people, right? Talking about your risk tolerance, fears, anxieties,
Yeah. Screen time, it is important, especially in the beginning, but studying is more important. Like I would say, if you are just starting out, screen time to study time, or active trading to study time, maybe like 20% screen time, 80% study time.
Wow. Okay.
For sure.
So you trade live 20% of your time, and you study what you did 80% of the time.
Yeah,
Okay.
absolutely.
All right.
And I've kept that ratio throughout my whole career.
You know what? Listen, I've been trading for a long time. I never heard anybody phrase it like that. It's really good. So more analysis than action, right?
Yeah,
Yeah, definitely. That's my whole job as a trader is preparing for probable outcomes. A lot of the work I do never bears fruit because I do my analysis, I look at my charts, and that's the trade I want to take. And if that and that and that is true, I will take it. And then some of the conditions are not met, I just don't take the trade. And so a lot of the preparation work I done never bears any fruit, but obviously that's just because my process is structured in that way that I will miss a lot of trades, but the trades I take, they are the absolutely perfect ones. Right?
I think it comes to you as a second nature because you played poker before, and you understand the concept of variance.
Yeah.
That you can have 30 bad hands and still come out ahead, right?
Exactly.
And traders, they judge themselves. And I say it unfortunately because they don't know, and they do it because it's instinctively to judge their ability based on every single trade. And I tell them, listen, you can have a great trade, doing all the wrong things, or lose money and you did all the right things. So you can't measure it on a per trade basis, right?
One thing in this context, what I try to always tell people is that you say you want to trade for a living, you want to make this your career, you want to make this maybe the next 10, 20, 30 years. Just think about how many hundreds or thousands of trades you're going to take. Then that some people it helps put this one trade into perspective. where you not freak out if one loss and then gets out of control and suddenly something really bad happens. So you really need to think in the big numbers and the variance. But when it comes to screen time, what I think is the practice is good, but only, like the quote goes, only perfect practice makes perfect.
Yeah. Right.
So it's just like when you look at sports, for example, whatever, football or soccer, the teams, they have their playing time, which is the trading time, but then they go back to the pitch, they train, they review, they analyze, and that's really when you find your edge, when you become better. And then you're ready to play again, you're ready for your trading. And it comes down to the trading style, obviously. If you're a day trader, you have more chunks where you are actively in front of the screen, but there will be huge blocks where there's just nothing to do. You have done your trading work, you've put in your orders, you've researched your patterns, your trading plans are done, and then you need to go back to your journal or whatever you do, your back testing, and that is not screen time, that is the practice time. Yeah. And that's when you get better, I think. That's the job of a trader. And that's where you sharpen your edge, that's where you find out what works well, what doesn't work well, you find your patterns maybe. One thing is that you should always ask yourself as a trader, do you remember your last 10 trades? And I think...
That's an amazing point, it's so true. I'll elaborate in a minute, it's such a good point.
And even you can bring it down to, maybe you remember your last trade, but the last 5 trades, it's already difficult. And if you don't remember your last 5 trades, then you have no way of actually knowing what is happening, what are you doing actually. You forget instantly the mistakes that you did and patterns that keep repeating in your trading, and that is such an easy thing to improve. You don't necessarily need like a sophisticated journaling routine. Just start with collecting screenshots of your trades, and you can go through them in a minute at the end of each week. But you already have a much better idea of actually what you're doing as a trader. And one thing is, traders, when they don't see the results, it's not like they do everything completely wrong, but there are usually certain themes that they keep repeating, there's 2-3 mistakes. And if you see really that, okay, I always keep doing those 2 things, and if I would have changed those things, then my trading performance will be maybe much better already. And this is such an easy thing to do. It doesn't take a lot of work, but it can be a huge shift for your perspective.
Yeah. So 2 things. One, first of all the mistakes, that's why you guys should use EdgeLonk, because you can see the patterns of your mistakes and not just guess it based on intuition.
Yeah.
But what you said is such a key point, because in my experience, and look, I'll be very honest, being a futures broker is hard, right? Because it's a struggle for customers. We know that it's very hard to create consistency. But one thing I tell customers, and this is, you touched on it, that they change methods all the time, right? And they don't bring the mistakes that they've done and don't think about the mistakes that they've done to the new system, right? So their biggest asset, their biggest learning asset, which was the mistakes that they've done, they don't carry it forward. Yeah. And every few years they might, and sometimes they don't even necessarily change methods, sometimes they change an asset class. They'll go from stocks to futures to forex to options, but they make the same mistakes everywhere. They didn't make it a conscious effort, to learn from their mistakes. So I agree with real screen time, count your mistakes, it's your biggest asset, right? Yeah. That's a great point.
Yeah. And I read the book from, there was the Navy SEAL guy, David Goggins, very interesting when it comes to discipline. And he said, too that people always say you just leverage on your strength, and then the weaknesses are not that big of a deal. But what happens is that you cannot tiptoe around in life to just avoid the weaknesses. You just have to face the weaknesses, and then you can improve them, and then everything will become much easier. So you don't need to see, okay, if I would have used this moving average last trade, then I could have made maybe more money, I should have done this, and then you change it going forward. That's when you come into this loop of system hopping. But you just see, okay, this didn't work, why didn't it work? And then you try to find ways how to improve it. And also one thing is that it's usually not the tools that you use. The trader is usually always the weakest link in all of this trading business.
Yeah, that's why I think that for me the analogy really works that trading is a performance sports. That's just if you look at Floyd Mayweather, like some people say, oh, his hourly rate was ridiculous because he made like $20 million per hour. If you look at all his fights, but obviously his fights were just like maybe 2% of all the work he ever put into it, right?
Right.
And that's how
a
you
good
should.
point.
That's how you should see trading as well.
That's a good point. It's like an iceberg, right?
Yeah.
It's like the asset is really underneath. It's not what you see.
Yes.
That's a good point. So okay, let's talk about we covered this. Okay, so let's talk about discipline, right? So traders, I always say, human DNA is not built for trading, right? Our intuition is not built for, and the reason for it, this is just my opinion, is that now we're trying to figure out, how a whole group of people behave. So no, as opposed to like sitting in poker and you try to read 6 people or 5 people,
Yeah.
now you're reading thousands and thousands of people, right? And it's really, really hard to guess. So the discipline part, it just all of a sudden there's a subconscious, it's like people discipline,
Yeah.
and they're like, forget it, and they just they said, okay, I'm going to lose $500 a day. That's all I'm going to do, lose 500, and then they lose it, and then they just go nuts. So I'm always interested in knowing in other people's input. Now I have my own opinions, of course, and I always say, listen, you just have to do it. But how, in your opinion, people should develop discipline? And let me rephrase the question. What do they actually miss, in your opinion, about discipline, right? What is that in the element of discipline that you think they miss and they don't think about? Like, how do you think majority of people that, you inspired as a trader or discussed with them, what was their idea of discipline? What should it be, in your opinion, of course?
I think, like, for me, the biggest challenge, and I think for a lot of other people, the challenge with developing discipline was fear and anxiety. Because if you develop discipline and you develop a process and you do everything exactly as you should and you still lose money, then the shit really hits the fan. Because that's what people are afraid of. I gave it everything, I gave it my best, and I'm still losing money, and that's what they are really scared of. And that's why they don't even do anything in the beginning to start with, because that's much easier to say, like, yeah, okay, I'm still losing money, but actually last week when I was trading I was a little bit drunk and I didn't do my post process and so on. So they can always find a reason
right.
for losing money, right? But if they give it everything and they're still losing money, that's really scary, and that's why I think people have a really hard time developing discipline in the first place.
I see.
Yeah, I think it's an interesting point, because discipline is like this catchphrase, but I think
I agree.
there's always, because there's so much underneath this, you need to ask yourself, okay, why? It's not you suddenly wake up at the same time every day, you make your bed every time the same way, you go and sit in front of the computer the same time. That's not going to make you a better trader. There's always something underneath, and you really need to find out. And I think that's when really, of course you need to have structure, that's the given, but that's not going to make you necessarily the best trader. You need to really find out what is it that you're not good at. For example, people have the problem of missing trades. Then they say, oh, I should be more disciplined. Then I will make my trading plans and I will miss fewer trades. But what I've seen is that missing trades, and that's just an example, there could be many other ways how people not have the results that they want, is that missing trades, there are 2 reasons usually. First of all, they're fear. Fear is a big driver, and even below fear, why are they feared? Why are they feared? They're feared of losing, obviously. They are scared that they don't know their system at all. They don't have a process, so they don't actually know what they're doing. So even though you might have discipline, your system's not really mapped out. And certainty, clarity helps overcome fear. And people say, okay, I want to trade without fear. How do I do this? I want to trade without emotions. I've been talking a lot about this lately. Trading without emotions, I think it's a wrong approach, because you can use your emotions to your advantage at the same time. Ask yourself, why are you fearful? And then find out why it is. Maybe you don't have a good process. but maybe it's also because you don't know your system, or you have wrong expectations, that you're not meeting your expectations. And then you can attack the problem at the root, really. And you can do that with everything, really. If you're scared to pull the trigger, for example, that's another thing. Discipline will maybe help you identify more trades, and it will help you journal your trades, but you really need to get to the root. Why am I scared to pull the trigger? Am I scared of losing money? And then ask yourself, why am I scared of losing money? Maybe wrong expectations, or whatever. Maybe you're in a losing streak, and then you need to get to the root. So there's always underneath something. Discipline is important, but if you go, you always need to ask yourself, why is this happening, and why is this happening?
Mm-hmm. Right. So what I'm understanding, about discipline from, is that discipline has to be developed over time, and it's really a conscious effort to understand the subconscious of what really drives your actions.
Yeah.
Because lack of discipline, people think that lack of discipline is always loss of funds, but it's not always that. Lack of discipline is sometimes when your method tells you to get in and you don't get in.
Yeah.
Right? So sometimes, I had a conversation a long time ago with I remember an accountant customer, and he had an issue. He was like, everything lines up and I can't get in. And I said to him, listen, maybe because of your profession. Because profession of accounting, it's, debit, credit, everything always aligns. In trading, there's no guarantees. It doesn't always align. Right? And he started thinking about that, and then I started realizing that, people really not thinking consciously about their weaknesses.
Yeah.
Yes.
Like where it's coming from, why am I doing this? So it's always a conscious effort to not only read yourself technically, but also understanding yourself on a psychological level, right?
That's right.
So you guys those are excellent points.
By the way, in this context, I talked to a trader a while back, and he has a job, and he traded at the site, and then he had amazing trading results. Then he quit his job, and his results completely went 180 degrees. And then I talked to him a little bit, and then he said that maybe his idea was that, okay, suddenly there's all this pressure from being only trading, and at the same time he was missing the social component that you said. And then I said, okay, why not take a half-time job and trade half-time? And ever since then, it has completely changed. He's more happier, his trading is better. And so you need to ask yourself, okay, what is actually, because it's not like a cookie cutter advice that you can follow, because humans are different, you're driven by different emotions, goals, whatever you like, and then once you find it out, and once you actually you become conscious, then you can make better decisions.
Right. I actually recommend to most people not to become full-time traders. Mm-hmm. I tell them, if you have a job and you have security, you don't have this fear from the market. Yeah. You'll have bad days, you'll have good days, but if you, essentially anything you trade on leverage, like futures or Forex, it has to be risk capital. Now, clearly, if you're a professional and become better and better, you can put more money into it. But I always tell them, if you have a job and you're making good money, and you can have a schedule where you trade in the morning, like 7 to 9, the E-mini S&P, or you can trade at night, the liquidity in the Asian, the currencies, or the mini Nikkei in Osaka, right? You can do that. So I always tell them it will have a major impact, on you. It's lack of fear, it's analytical, and I really think that the spirit, if you approach things depressed, like if you lose money, and you're depressed, it's very, very hard to snap out of it and think straight. Right? But when you have a job and things don't work out and you still have income coming in, you know what? You can potentially recover from that, I shouldn't call it depression because, it's not clinical depression, but it's just sadness that you lose money, that you can put yourself faster back on the trail because saying, listen, I still have income, it's still coming in, right? That makes it a little bit better, right? The spirit, the human spirit, it feels better, right?
And then some people do like their jobs, or if you don't like your job, you can replace it with something that you like, and then trading supplements your income, and then overall you feel much, much better because trading has this amazing role in your life where suddenly you see the actual why are you doing this. So maybe you have a job you don't like, many people don't have that, unfortunately, but many people have passions that they don't want to get into because they think it doesn't pay the bills. But if you combine it, you have trading on the one side where you can trade and make good results, and you can have something else that you're doing part-time. You not need to earn a lot of money, but it all supplements each other. You will feel much better as a person yourself, and this will feed back in your trading, in how you approach your passion, and that's, I think, a very, very cool approach to your life.
Right.
Yeah, if your whole self-worth is derived from your trading results, you're in a really tough spot.
Yeah.
Amazing point. Absolutely.
Especially in trading where you don't, even you might put in all your best and you will do whatever it takes, you'll put in so much work, and then still you cannot control the outcome. So this is also one thing that's very, very tough on the people, where you're used, okay, you do your job, you get money at the end of the month.
Or you don't do it, you still get paid.
Yeah, and if you do a good job, maybe you get promoted one day. But in trading, there's no guarantee. You might put in so much work, you might be the best disciplined trader, but still maybe the market just has a time where it doesn't agree with your system.
Yeah.
Right. The key is to approach it as a business.
Yeah.
What people get, they get obsessed with the markets. You know, it's like some sort of an obsession of I want to be, you know, instead of saying, look, it's a business, I have to investigate it, I have to investigate how do good traders trade, what they have done, did I read enough books by people who had skin in the game, to understand the psychology of trading and everything else, not just jump into the pool and just like, and I think this is where the disappointment comes, right?
Yeah.
They go from 1 to 10, you know, instead of the steps.
Yeah, expectations, as I said, yeah, that's a big thing.
Okay, so let's go to some other questions that I wrote down here. Okay, let's talk. Okay, I'll ask this after. Let's talk about this. Okay, let's make a definition of a method. What components does a method have? From your perspective, what should it have? You know, entry, exit, risk management. You know, what else? You know, like what else?
Yeah, so if you...
Maybe nothing else, right? Maybe that's just it should be kept simple.
You can, like, basically... So I trade 5 strategies right now, and every strategy I can put on half a page of paper like this. Like the
That's a good point.
entry and exit criteria, that's it.
They told me a trader can define his strategy in one sentence sometimes.
Yes, yeah, absolutely. And that's just my entry, exit, and trade management, right? And also my risk management. And then, of course, the whole process comes after that. When do I scan for trades? Which markets do I scan for trades? How do I do my post and pre-analysis and so on? And that's the much bigger part. So that should all be in your plan as a trader. Also, what do you want to achieve with your trading? What's your why, for example? Where do you want to be in 5 years? Those are all important things to have basically put down on paper, so it's out of the back of your head and you know what you are doing, because when you are trading you need 100% mental clarity. You need to know what you are doing, why you are doing it, and when you are doing it. But as far as simple trading setups, that's 1 page for me.
I see. And first of all, I have to ask, why do you have 5 systems?
Well, let's put it this way. I started with 1 setup, and so basically in these 5 systems I trade, they all revolve around 1 single strategy. So I started trading this strategy and I tried to get in with a better risk-reward ratio, with a better win rate. So I started going down lower in time frames, and then I discovered 1 setup around my core setup that I could trade. So I was basically going short, and then during the day I was scalping around my core position. That's the second setup. And then the third setup was just like, I discovered that a lot of my setups I got in a little bit late. So I wanted to get in earlier, but again with a plan and with certain conditions. So basically what I do is I try to capture the whole move, and I try to get in with as many positions as I can, as long as the trend is going, and that's what my strategies revolve around.
I see. So again, you know, so in your opinion, a method?
The most important thing I think in this question is that the problem traders have is that they define a system with an entry signal, and then that's it. So people say, okay, I'm using a moving average crossover, whatever, and it doesn't work. But that's a very, very narrow-minded view on a system, because exits are important, but if you look at your trade, the people don't spend enough time looking beyond the exit. All of their attention is spent on how to get the better entry. But if you look, for example, okay, the outcome of a trade is defined by the exit, not by the entry necessarily. So you need to pay also attention to how do you exit your trades. And then it comes down to, okay, an exit can be a negative or positive. So how do you cut your losses in an optimal way? How do you let your winners ride? So look beyond the entry and also try to build a holistic system. How do you place stops? How do you place targets? How do you manage your trades? And that's already something that you can start out with to create a more solid approach. But don't just stop at looking at entry methods. That's, I think, where people get it wrong, and then they get into a system hopping loop.
Yeah. We're gonna go to the second question. So now people, didn't really define, could potentially define their method the wrong way, which is based on entry, and then they start the system hopping process, going from this to this to this to that, right? When in fact they're applying the same mistake in every single method, right? That has been your experience.
Definitely, yeah. And also one thing is that they are not even aware of what they're doing wrong, probably. So as I said, you don't need, you should have it, but you don't need as wrong in the first place. What is really a good approach is just from every trade that you take a screenshot, entry and exit, file it away at the end of each week, every month, come back to it, and just look through it. And the more similar your trades look like, usually that's a very good indication of how consistent you are in your approach. But if you see that every single screenshot looks completely different, then this should be a very big red flag and warning signal that something is not going right. Because what this means is that your entry might be different, your stop loss approach might be different, your take profit might be different, and then you cannot make sense of the data that you get. Because you might see, okay, I'm losing money, but you can never find out why if everything is all over the place. So try to have more consistency, and then it comes down to sample size thinking. At least do this for 20-30 trades. You don't need to do this for the next 10 years, but at least follow it for the next 2 or 3 weeks, 20-30 trades, and you will get already a much better idea of where your big problems are, and then you can build it around it.
Want to go back to something you guys discussed before. Actually, you touched on it, so I'll start with you. We'll talk about emotions for a minute. You said you can use your emotions in a positive way. Can you elaborate on that a little bit?
Yeah, this is I think it's important, and especially in today's world, we have lost the ability to be self-conscious, because what this means is that we need to be able to spend time with ourselves, and especially with the phone these days. Wherever you are, whenever there's just 1 free second, you pull out your phone and you just do the same thing. You open Facebook for the 100th time every day, and people get really. I've experienced it lately. My headphones broke, and I couldn't do anything. I was just left with myself, and it was kind of weird because you're not used to it anymore. The boredom has been completely eliminated, but this also means that we have completely lost the connection to ourselves. So when traders are trading, they always say, I want to trade without emotions. But first of all, I don't think it's necessary. It's also not probably possible, because as humans, emotions are what drive us, and they can be important. And once you get to a point where you can actually recognize your emotions before they take over your whole self, and then you're in this reactive mode, where you just get into your charts, you lose a trade, and then everything is you go blank. That is where trading with emotions can actually be very productive. When you realize, okay, I'm feeling a little bit aroused, and then you need to ask yourself, why is this happening? And then you see, okay, the trade setup is coming, it's almost there, it's not quite there, I lost my last 2 trades, so I want to get back. And that is really where you need to ask yourself, okay, what is actually happening? What am I about to do, and why am I doing this? And then you can see, okay, is it fear? Is it excitement? Do I want to get back? Do I want to recover from my losses? And that's how you can use emotion.
Consciousness, right? Being conscious of your thought process.
You need to, before you can even do that, you need to be aware of yourself. Absolutely, you need to realize that what you are doing right now is not really yourself.
Right.
You have to realize there's someone else controlling my mind right now, and obviously meditation helps a lot with that. To just become self-aware. But another thing that really helped me was, for example, in Japan, the train conductors, before they do something, they say it out loud and they point with the finger like, okay, now I'm gonna close the doors and now I'm gonna drive out of the station, stuff like that. And that's how they reduce the mistakes by 80 or 90% or so.
Oh wow.
Yeah, just by being very conscious about what you do. And that's what helped me a lot in trading, was that I simply sat in front of my computer and I was talking out loud everything that I did and everything that I was thinking, and I was listening to myself. And that's what's helped me a lot to become self-aware.
You know, a process that I go through, I always ask myself, is it me or is it my brain that's pushing me right now? You know, is it me or is it my brain?
Yeah.
You know, who's in control right now?
Yeah.
Whenever I feel something, right? And it's hard to tell sometimes. It's really hard to tell because you think it's you, but loss of control is sometimes because of DNA, right? Something way stronger than you, right? It's...
There's one thing.
No, please.
I read the book from Magnus Carlsen, who is the #1 chess player in the world, and he said when he looks at a board, he knows after a few seconds what he's going to do, but then he still takes 5, 10, 20, sometimes more minutes to just think about what he's about to do, and if his gut feel is actually, if it's driven by emotions or is this really the right decision. And for traders, one thing that can help a lot is just when you're about to do something, just at least step back for a few minutes, take the finger off the mouse and think about it. Is this really what you should be doing? And we all know that we know often what we should be doing, but we don't do it because we reason ourselves into something that is not as good for us.
Yeah. You can also imagine like yourself or a person that is the perfect trader standing behind you and looking at you, and he's judging you like, what the hell are you doing right now?
Right.
So that helps as well.
Yeah.
Awesome.
There are some mind tricks.
Listen, everything helps. Okay, so we spoke about that. You know, we're here at the last question. So the question is, what trading emotion costs traders the most? You know, what do you think costs traders? Where do they really lose control of things? You know, what is that one time that, you know, or is it the chain of events that leads them to that? You know,
If I had to pinpoint one emotion, it would be greed. It always boils down to greed, in my opinion. That's what makes you do the really stupid stuff.
But it comes often from expectations, I think.
Yeah,
So expectation management, we touched upon it so many times, you can always bring it up.
Yeah.
I think that's a big one.
Sure, expectation and also ego, like, okay, I've lost 2 times on gold, so I'm gonna try to get it all back from gold, like it gets personal. So yeah, ego is a huge part, obviously.
they say never get angry, right? That's when they get angry and they say I gotta make my money back. Oh, anger in trading is not that they lose their mind and they throw off the computers. It's internal. It's just a click.
Yeah.
It's just anger is a millisecond of a click, right?
Yeah.
I always say, what I find traders, you know, one of the biggest obstacles is really their imagination. You know, I think stop imagining prices. You know, if the crude is trading at $60, you know, and you went long, don't start imagining trading at 60.50 or at 70 or just you're making 10,000 in the trade, because now with this you just really have to absorb out there, you know, what the market is doing and what it's telling you from the minute you enter, right? Because when it doesn't meet the expectations, that's when they start messing up, right?
Yeah.
They said, well, it's got to go back. It did it in the past.